Hi guys, Florian here. Today we'll be looking at the company that I just added to my closer watch list, and I'm thinking about buying it if the price drops down just a little bit more. Today we'll be looking at Chipotle. As usual, we'll have a look at the qualitative aspects of the company first, then we will look at the financials, and in the end we will even have a look at the latest quarterly report that just came out yesterday. And then I will sum it up and tell you why I think this is a good investment or might be a good investment in the future. So Chipotle has the ticker of ZMG on the New York Stock Exchange. They are working in the consumer discretionary section. They were founded in 1993 in Denver, Colorado. They have around 105,000 employees and their headquarters is currently in Newport Beach, California. The market cap sits around 50 billion USD. Chipotle is a US-based Mexican fast food restaurant. So they have all these kinds of burrito bowls, salad. You can see it's all compared to other fast food restaurants, a burger or pizza. It's kind of healthy food. And they are putting a huge focus on customization of their food, so you can really choose in detail what you want to add to your burrito, which kind of rice, which kind of meat or different proteins. They even have different kind of beans that you can add to your meals. Of course, all this comes again with different side dishes and the regular stuff, drinks and kids meals and so on. You also get in other fast food restaurants. When we look at the fast food market in general, we can see that it's expected to grow with a 6.5 CAGR until 2028. When looking at different market reports, I also find this number varying between 4 and 6%. So please take it with a grain of salt. It might be a little bit lower than 6% from what I found. What I like very much about Chipotle is that they are putting a huge focus on innovation and automation, even though they are basically a so to say stupid fast food restaurant only. So, for example, they just opened up the last year already. They opened up the 500th Chipotle Lane restaurant, and the Chipotle Lane is actually very similar to kind of drive-in restaurants or so. It's not a real drive-in though. So you have to order your food either online via the app, and then you can just go there and pick it up in the Chipotle Lane. So there is no counter or anything where you can order on the spot. This makes it quite convenient for Chipotle because they are not affected by certain regional regulations that might prohibit the use of drive-ins per se. Another thing that I find really interesting, and that again shows to me at least that this company is very innovative in their sector. They are putting a huge focus and investments on the automation of their production line, their food production. One example of this is that they just invested in this in Hyphen, and they are trying to test a new digital make line. This is almost fully automated, so the order comes in via the app or any platform, the web page or something. And basically this automated system is providing almost everything by itself. So it adds all the content, it adds the ingredients. There are intelligent dispenser systems in here that portion the ingredients in the correct amount. It even can include different kind of side dishes like these burritos, tacos, or quesadillas or so. And in the end, the employee just comes by and they just put on the lid on the top of the food and provide it to the end customer. Pack it to the end customer. Maybe they still need to add some final items, chips, side dishes or so. But other than that, everything is done fully automatically by this order line. This, of course, frees up the time of the employees for other tasks. So you also need less employees in your restaurant. And also by automating this and by having the same line in many, many restaurants, Chipotle could keep the quality in each restaurant exactly the same, because the settings of these machines should be the same in each restaurant. So this is not the only automating system that Chipotle is already investing. They also recently invested, or they're increasing their investments in a device called Chippy, which is basically making the chips. You can see here in the back of the picture, we have the chips bags already standing. And basically this device Chippy is cutting and seasoning these chips automatically by itself. I like to do this especially because I think there is a huge potential for margin increase in the future by further invest and in this automatic system and decrease the manual labor in their restaurants. For a fast food restaurant, I think this is very, very nice to see, and that is one of the main reasons why I like Chipotle so much. So let's have a look at the financial aspects of Chipotle. First of all, we can see that the revenue and the net income has been growing very steadily over the years. You can see there is an outlier in 2016. This was actually due to some quality issue and issues with food poisoning that Chipotle had back then. But since then, there never have been such issues again. So from what I can see, Chipotle increased the quality of their meals. They removed all these issues they had in the past. And since then, there was a steady uptrend in revenue, but also in net income. And if we go down here and look at the operating cash flow and the free cash flow, we can see it's almost the same. We have a very slight dip here in 2020, but this was due to COVID and COVID effects. And since then, Chipotle has recovered amazingly. The stock-based compensation is kind of stable. It has increased over the years a little bit. But compared to 2021, the stock-based compensation has gone down in 2022 again. So it's always going up and down a little bit. It's actually a bit more than 10%, which is a little bit higher than I would like to see it. But I think it's still on quite a good level. So this is agreeable from my side. If we look at the return of invested capital, we can also see the same since 2016. It has fluctuated a little bit, mostly due to the COVID effects, but in general, the trend, especially in the last years, has gone upward. And as I said before, with all these investments in automation, I think they can increase the return on capital and also the operating margin in the future. One thing to note about Chipotle is that the business model of Chipotle is actually quite different compared to other fast food restaurants. The difference lies in the fact that Chipotle owns all restaurants by themselves. For example, McDonald's, they have a franchising system, so they get their money via the franchising system. Chipotle really is a restaurant provider, so they are selling the food to their customers. This can be seen if we look at the cash flow. You can see the cost of goods sold. At Chipotle, it's around 76%, which is quite high for such a fast food chain. If we have a brief look at McDonald's, for example, you can see that the picture will look quite different. In this case, it's lower than 50%. And the main reason for this is because McDonald's main revenue is coming from franchised restaurant and not from the direct sales of the food. So this is something to keep in mind. But with this kind of model, Chipotle actually has very close control over their restaurants and very close access to their customers. On the other hand, of course, it's a bit more capital intensive compared to the franchising system that others have in this case. So just yesterday, Chipotle announced their quarterly results from the Q3 2023. And we can see that on a year-over-year basis, the revenue increased by more than 10% again. The restaurant sales increased. That means more people went to the restaurants, or people bought more stuff in the restaurants. And the operating margin did also increase from 15% to 16% on a year-over-year basis. So all these numbers still point in an upward direction, even the last quarter, which some analysts also did not expect. Of course, it needs to be seen how it will look by next year, and how the economic environment will look back then. If we enter in a recession and if the customers don't have as much money to spend anymore as they do right now, this might change, but at least right now the trend still looks quite positive for Chipotle. So we already looked at the competitor McDonald's. Let's see how the competitive environment of Chipotle in general looks like. So we can see that the threat of new entrants in the casual fast food restaurant area, I would estimate it as medium. Main reason is it is quite easy to open up a restaurant, and new restaurants are opened up every day. But to reach a scale that Chipotle already reached is not so easy. It's not unheard of, and it happens from time to time, but it's not that easy. Therefore, I would think this is medium. The threat of substitutes, on the other hand, is quite high. You have a lot of different fast food restaurants to choose from. So it always depends on the taste of the customers, of the positioning of the restaurants, on the branding of these restaurants. There's so many different factors to account for. So I would think that the threat of substitutes is quite high, even though Chipotle has a slight differentiation in this case, because there are not so many Mexican food restaurants available compared to like standard burgers or pizzerias or so. The competitive rivalry is also very high in this region. As I said, there are many companies that are working in this sector, and if the taste of the customers shifts, it might be an issue for Chipotle. Same is true for the bargaining power of the customers. Because Chipotle is dealing with the end customers, it is very sensitive to the money these consumers have available. If they don't have any money to spend on these kinds of fast food things anymore, it is also a big issue for Chipotle. And also Chipotle is very dependent on the price of their suppliers. They even had a section in their last 10K report, and they say essentially here, if the cost of the ingredients significantly increases, they are even thinking about suspending some service menus, so removing a couple of items from the menu, or maybe they need to increase the costs. Both of these would be very bad news for Chipotle, I think, especially if they have to remove too many items from their menu. This has a huge impact in the end in customer satisfaction, and this could also have long-term implications. So therefore, I think the bargaining power of the suppliers is very high. So if we sum up the risk factors and the growth prospects of Chipotle, I think the main risk factors are a recession that might come next year. The minimum wages increased in some areas where Chipotle is operating, especially California. So this might also increase the price pressure of the company. The student loan payments in the US will be returned next year. So again, this means less money in the pockets of their customers. And if Chipotle needs to increase the prices, as we just pointed out, this is also an issue. So because they are so close to the consumer behavior, all these factors have a huge impact on them. The growth prospects of Chipotle, on the other hand, is that I can see the margins on the long run increasing with all these automation investments and the trend to more automatic food production lines and Chipotle Lane, where you can order the stuff online and just drive by and pick it up. The trend to healthy food especially might even be a benefit for Chipotle, even though they are a fast food restaurant. But compared to many others, they still have kind of a healthy food. And there are still a lot of expansion options for Chipotle inside and especially outside of the US, because outside of the US there are only a handful of Chipotle restaurants available right now, unfortunately. So let's see where the company stands financially. When we look at the revenue and the net income, you can see it's a steady upward growth. There is one outlier in 2016. This has been due to some quality issues with food poisoning that Chipotle had back then, unfortunately. But since then they could increase the quality again, and the growth was quite nice over the last 2 years. Same is true when we look at the operating cash flow and the free cash flow. Again, we have this huge dip in 2016, and in this case we can also see a slight dip in 2020, which is due to the COVID lockdowns, unfortunately. But since then, Chipotle could also recover quite nicely. When we just look at the stock-based compensation, you can see Chipotle is trying to keep it reasonably stable. In 2021 it was increased a little bit, but it dropped down in 2022 again. It is still a little bit above 10%, so it's a bit higher than what I would like to see, but I think it's still on an acceptable level, so to say, especially because I cannot see a clear or a rapidly increasing trend line here, which is definitely something you should watch out for. If you look at the return of investment here, since 2016 we can also see that it has increased again. It's fluctuating a little bit, but especially in the last years there was a clear upwards trend. And when we think about the long run, I think that Chipotle can definitely benefit here from their investments in automation. These growing trends can also be seen in the last quarterly report that was just released yesterday. So this is brand new. And for the third quarter of 2023, we can see the revenue was increased again on a year-over-year basis by more than 10%, which is nice to see. The restaurant sales increased, the operating margin increased again, and even on the restaurant level, it was increased. So all in all, it still seems that Chipotle is growing quite nicely, even though these numbers, when we compare them later to the 5 years CAGR numbers, are not as big anymore. And depending on the economic development in the next year, there might be some headwinds for Chipotle, especially if we enter in a recession and we already established that the consumers are very important, and also the money that the consumers have available. If they don't have as much money anymore, this might be an issue for Chipotle, and it might hinder their growth, at least in the next couple of years. But when looking at the long run, I still think that Chipotle has a lot of opportunity to grow here. So let's look at my checklist now. We can see the revenue growth has been quite good in the last years. This is almost double my threshold. On a year-to-year basis, it's around 40%. On a 5-year CAGR, it's even almost 15%. This is very nice to see, so definitely a green checkbox here. When looking at the net income, my threshold sits about 10% with the 5-year CAGR. We are above 4 times that with 45% CAGR and 74% on a year-to-year basis. So the net income growth even sped up in the recent year. Definitely a green checkbox again. Free cash flow, same picture. This is very high and it increased last year even. I don't think that Chipotle can keep up this huge growth over the next years, especially when we might enter a recession next year or a tougher economic environment. But still, even if we go down from these numbers, it's still a good growth. The free cash flow yield is a bit lower than what I would like to see. But when we also take into consideration the next point that Chipotle has a very, very clean balance sheet. They only have long-term debt of 2 times their EBITDA, which is very, very low, especially when considering the growth and that Chipotle is also investing in automation and building up new restaurants. And so this is very nice to see. So I think in this case, because of the clean balance sheet and the still very strong growth trend, the 2% free cash flow yield is okay in Chipotle's case, even though I would like to see it a little bit higher. So it's a yellow checkbox, but it's not a showstopper for me. Unfortunately, Chipotle doesn't pay any dividends. I like to see the companies that I own to pay dividends. But again, Chipotle is a growth company. Growth companies usually don't pay that much dividends, and it's not a mandatory point for me, so I can live with that. The margins and the return of invested capital have increased in the last years. So again, green checkbox for me here. So before we sum it up, let's have a look at my fair value calculation for Chipotle. And I plugged in the numbers that we just saw here. I estimated the free cash flow growth rate for the next 10 years. I definitely went down from the numbers that we just saw to only 15%. I think even 15% is a very, very good growth rate if you look at the longer term. Same is actually true for the net income growth rate. But please take these numbers with a grain of salt. When you change these numbers around, also your fair value calculation will be quite a bit different. So for example, if we change up the 15% to only a 10% growth rate, you can see the fair value significantly goes down. On the other hand, if we take the current growth rate that they have of 40%, you can see then we are way above the current market price of Chipotle. So really do your own estimations, do your own calculations. For me, I think 50% growth rate is still realistic for the next years, but it depends also on the short-term economics, how it goes. Same for net income growth rate. What I also did is I estimated the price to free cash flow multiple and the PE multiple for a 5-year average. And when we look at the current numbers that Chipotle has, we can see that they are sitting at a PE from the last 12 months, trailing 12 months, 45, compared to their 5-year average of 82. So this is insanely high and shows us again the growth potential, and that Chipotle is also a growth company. Same is true for the price to free cash flow. It's at about 30, which is very, very high for a restaurant business. And the 5-year average was again even higher. So I am estimating that these numbers will come down to more regular values here. Again, if you change them up and if you don't think that these will go as low as I estimated here, please do your own calculations. I try to be on the safe side. I'd rather use a bit lower numbers here and have some more safety margin instead. So without including any safety margins, we are around 1,800 USD, which is exactly the stock price right now. So Chipotle seems to be kind of fairly valued at the moment. Still, I would like to include my margin of safety of 10% here. And with that, we come to a fair value of around 1,600 to 1,700 USD. So right now, as I said, Chipotle is sitting at 1,800 USD, and we have a resistance line at 1,730 USD. Here we are already in the area of my fair value, and I think, as I mentioned before, I put Chipotle on my closer watch list, and if Chipotle retracts in the next months below this threshold line, I am thinking very strongly about entering a position. I am not invested in Chipotle yet, but I would love to own this company because I think they have a huge growth potential. Just right now, the margin of safety is too low for me. I would like to see it the price to come down a little bit more before entering my position actually. So guys, please keep in mind, this is no investment advice. This is only my own thoughts and my own analysis that I do for my investments. Please do your own due diligence and your own analysis. There is always the risk of losses in these kind of stock investments or any investments. Also, if you like, please leave me a like and subscribe. This would help my new channel very much. Other than that, see you next week. It has been a pleasure. Thank you. Bye-bye.